Morning, everybody. It is 8:25 a.m., March 23rd. Big FOMC day yesterday. Obviously, said before, I couldn't watch the FOMC. Unfortunately, I had a meeting to go to. But what a crazy move, huh? Initial move up, like I said yesterday, followed by move down. Obviously, Yellen and Powell but were both speaking. They both kind of one, like Powell said that he was going to cover all depositors, and then Yellen said no, it's not a blanket response. He raised it 25 basis points as expected, right? So that's what happened. Let's get into the watch. Let's just see what's going on. Getting a kind of a bounce here, so let's look at the futures. So we got Bitcoin's up 3.43%. We got gold's up 1.66. Nasdaq's up 0.89. The Russell's down. Russell's up 0.63. ES up 0.45. 30-year bonds are being bought, which should drive the 10-year yield down. The Dow is up 0.16. The dollar's pretty much flat, but down 1.2. Down 0.12. Crude is down 0.42. 10-year yield is down 0.8 at 3.47. The VIX is down 4%, 4.04. All right. Let's look at some important stocks I look at. All right. China just had like a nice rebound with, like, I believe 10 cent and stuff like that. So they saw a nice lift in that type of the rebuild of China, the reopening of the economy. So BABA is up 4.97. AMD up 2.52. Netflix up 2.47. Tesla, I know they're talking about pricing in China. They're up 2.17. Nvidia's up 2.12. These are pretty big little moves here. Not even little, right? Like look at that. Meta up 1.64, right? So I'll just talk about the 2%ers and then the 4%ers. Laggards, there's not much. Boeing just got to sign some big deal with Japan. So Goldman Sachs, but the laggard getting killed is Coin. Coin's getting investigated by the SEC. So they're just getting hammered right now, down 13.53%. That's really getting hammered there. Let's look at some top sector stocks. So let's see here. Morgan Stanley is leading the pack here, up zero point 0.8 pre-market, followed by Qualcomm and JP Morgan. Any laggard to speak of? Not really. The only flat one is healthcare, United Healthcare, but there's nothing to speak of weakness there. Let's go to sectors. Leading the pack, semiconductors up 1.3, followed by tech and discretionary. No really weakness to speak of here. So that's that. Today we got initial jobless claims coming out, so we can go to that before that comes down. Let's check that out. So let's see how that should drop in like a minute. Let's see here. In that minute, might as well just talk about the market. We have a minute, so let's get into this really quickly. What the SPY did. So this 50% retracement from this high to this low has still been resistance. FOMC popped its head above, right? Look where it landed, right on the anchored VWAP, 200-day moving average, and that was support. Hold on a second, my daughter. What? Here, use the blanket over there, and I'm gonna give you your medicine, okay? My daughter's sick right now, so she's home. So let's look at that. News is probably dropping in 15 seconds, so might as well just go back to it. Let's just see if what this does. This just jobless claims are we're expecting 197. So should update any second now. I don't know why this doesn't update every time. Very interesting. I have to go to my Twitter here. Alright, here we go. Initial jobless claims 191 versus 192. It's 191. There we go. So still under. The labor market's so tight. So, all right. So I don't think that's going to be much of a thing right now. So let's get into the daily chart. Apologize for that. All right. Let's just look at this together. All right, so anchor VWAP was support from the lows, right? I actually started an anchored VWAP at the highs of the FOMC. So you can see that little white dot right there. That won't show up until a couple days to really see what it does, but I anchored a VWAP right to the highs of the FOMC statement. So let's get rid of those so we get a cleaner chart. Alright, so we went past the 50-day moving average and went right down past the 20, past the 9 EMA, and found support right at the 200-day moving average in the SPY. So right now we're at 394, so right above this key level right here, right? And remember this 50% retracement at 399.48. That was the barrier that really the market needed to power through in order to break this downtrend, but it didn't, right? So we're probably gonna decide today, like, big move like that, you maybe digest the move today, or it could get some continuation a little lower. We have to see. Okay, so the Qs, bless you, baby. And so let's see what the Qs did. Right, so the Qs made a nice move higher with the FOMC, and then came basically to the lows of the previous day, right, above all the moving averages. Remember, the Qs don't have financials, don't have that, just it's basically tech heavy sector, tech heavy index. So kind of came down to this low right now, 308. So currently they're right under this resistance level. So have to see how that plans out. Let's look at the Dow. So the Dow came up to this level, 326, key resistance, got rejected, hit the 20-day simple moving average, went through the 9 EMA daily, and closed down here. All right, the Dow currently is at 320. It's not that strong. It's only about right here. Okay. IWM. Now that's the weakest member. So that came up to this key resistance level. Man, I wish I was home. I probably would have shorted that. And went right back down to this key support. Now that currently it's at 172.17, so it's about right here. It's hanging out at the lows, basically, the Russell. Okay, so remember, you can clearly see with Fibonacci, it's only been able to retrace like 23.68, which is a very weak pullback. Okay, the S&P has had the 50%, but not the 61.8, but the 50%. 61.8 is the last line of defense. Okay, let's look at that triple headed. All right, the yield been all over the place. Back to this range again. Okay, back to here, this little range that we've been holding in. So we have to see, that's yet to be seen. Let's look at that VIX. The VIX was hanging up around here. Now we're at around 21.36. You're done? Okay. You want to bring me your iPad? Go ahead. I know. Um, so this is what the VIX has been doing. We have to see kind of a little bit of lower volatility now. Let's see the dollar. The dollar's actually been going down, so yeah, the dollar's starting to go down, which usually would be good for equities. Definitely good for commodities like oil. Okay, we're down to 102. Okay, so we have a support at 101. You have to keep an eye on that. All right, let's go over to our good market. Actually, let's go real quickly. I want to go real quickly into, just curious to see the Fed Watch tool, and it's 50-50 now versus a pause. And this is for May 3rd. A pause and a 25 rate basis hike again. So it's split down the middle for the Fed Fund futures. Very interesting, right? A couple other things in the news. Let's go here. So I talked about the Yellen and the Powell thing, but the rate hikes. The Swiss National Bank also did some rate hikes, and so everyone else in central banks are doing the same. So they're shrugging off the banks and still going forward with the rates. SEC tightens grip on crypto. That's really all I wanted to show you there. Other things to note: Apple's considering English football streaming rights. They're also, I saw, looking to get into the cinemas. What else that I saw of note? There's the Boeing Japan Airlines. Let's see, Coinbase we already talked about. They're getting investigated. Yeah, yeah, that's about all I really wanted to talk about there. All right, so we can move on from here. And I'm going to bring up the volume profile, market profile. Let's get into this market. Okay, let me just adjust this. Could probably make this a little bigger here just so we can see what's going on for today. All right. Give me 1 second here, guys. Did we fill a gap here? Yes, we did. I just have to remove this. This was a gap that was filled yesterday, so let me take that off. All right. Let's talk about it. So obviously a lot of volatility when the statement was released. Okay, so we have a high up here, 40.74, low of 39.66. Okay, now we have our friend, the single prints, right? A lot of single prints. Okay, that's a lot of one-way selling right there. All right, now this is a spike. All right, let's talk about the spike rules. This is considered a spike. Spike rules is you can judge this by what the market's doing, right? How weak it is. So if the market, just give you an example here. Here's price, 39.90. We're in the middle of the spike. That's bearish. Okay, just simple as this. If we were up here, that wouldn't be as bearish, right? If we were down here, that's super bearish. Easy way to just look at the market. And what that means is the market is accepting these lower prices, even though you're seeing a lot of big moves pre-market in individual stocks and tech, right? But the S&P is accepting these lower prices. You got the 200-day moving average here. We're below it in the futures. Okay, we're within the single prints of yesterday. Just accepting lower prices. That's all it is. Now, always the key line in the sand, right, is the 50% retracement of the move. 50% is 40.20. So that's the key, and that's also lining up with the 100-day moving average. Okay. So this, every time you have a big move like that, if you're bearish, you want to see the market below, hold below that level. Now, what do you have below that? You have the monster level, right? So this is a lot of resistance up here. That's tough sledding to go higher. Hence, my bias will now changed as long as we stay below the 50% retracement and this big level. It is on the bearish side. Okay. Okay. So things to look for today. The only thing that I'm really going to be interested in is obviously it looked to go short. We're in the, see, this is what I'm saying. Today there's a high probability, okay, when you have big moves like that, but it's an FOMC, so you can get continuation. But the market's got to digest this move, okay? So we're holding these lower prices, okay? Now, we do have a somewhat of a weak low here, right here. So overnight came down to the RTH low. Couldn't find further sellers, so it went back up, right? But now this is a place where buyers are. We come down here with volume, you could get the continuation. Okay, you can get the continuation. So from this, the things that I would be interested in as far as like going short. Okay, now you have 200-day moving average here with supply zone. That's good confluence here. Okay, top of the single prints. So one thing I would look for is if we opened up, we kind of moved a little higher, poked our head even a little bit above it. Remember, got the 50% retracement right here, 40-20. And if we pop our head and you start making lower highs, and now you're in supply. I mean, supply definitely could reject it as well. I would definitely want to target this week low. Okay, that's the overnight low, RTH low. Okay, you probably get a little bounce there. However, hold one again and target this demand zone down here. I would say that's around 39.50. Okay, that's one. Okay, that's for continuation, right? Well, let's say the market goes a little higher, right? Around the 40 to 50% Fibonacci. Even if it pokes its head up into these monster levels up here, right? That's going to be a lot of tough sledding to go above that. I mean, that's why I'd be primed for a nice short. Even if it whipped above it real quick and came back through it, that's a short. Okay, that's definitely a short. And then you target developing volume point of control, which I don't know what that would be, right? And then we can get a move down, ripping profits off. Maybe your ultimate target is the lows if we went up this high. That's kind of what I'm going to be looking at today. I would only be interested in something long if, what do we have to do, right? Get out of the spike, go up to this 50% fib, go, move across the monster level, hold it higher low. Then I would only be interested in maybe along and target yesterday's high. I don't see that likely today, hence why I gave shorts. Okay. So that's kind of my plan for the ES. Now, as far as the NASDAQ, let's do the NASDAQ now. NASDAQ's got a pretty bell curve here. Nice composite of the week bell curve. That's like a completed auction. Very balanced. Okay. Now NASDAQ's stronger, right? But let's look at the NASDAQ. We have our single prints. And notice, this is very interesting. I just talked about the spike, right? So you got a spike here. I mean, you could start it from here, but I would like, you could, it's really actually, you could start it from here. So here's our spike. So, like I said before, right? You judge what the market's telling you, right? By the spike. Well, we're at the top of it, right? We're still within it. So Nasdaq's accepting it, but you saw all the pre-market stocks being strong, right? Lifting off. Now this Nasdaq has a very nice weak low here as well. Okay, with a demand zone. So the Nasdaq has a weak low, so that you'd want to pay attention to this if we went down here. Okay, but here's the difference in the Nasdaq, right? We're above key levels in the Nasdaq. So it's a very push and pull with the ES and the Nasdaq, right? So, if I'm looking at it here, here's the most traded price of the week here too. So look at the difference, right, in the two markets. The other one is below key levels and is farther down in the spike. The Nasdaq is in the upper end of the spike, and it has a demand zone, and it has this key most traded price of the week, which is 126.50, which could be support. So it's just crazy how this market's so the contrast, right? So I have to say, in this case, what I would look for is, you know, there is supply right here. That's all right. So I would say this: I would look for this market to push up. Anything I'm gonna look short in the Nasdaq, I need to see a very nice push up here. Like, now, remember, here's the 50% retracement of the Nasdaq. Lines up. This is kind of like a very nice confluence here, right? So 50% Fibonacci of yesterday's move is 128.79, but just happens to be the most traded price of yesterday, and what happens to be the start of supply right here. All right. So these are where a lot of shorts initiated positions were made. Now that has to hold. That has to hold. Now this is my tipping point for the Nasdaq. Now that I'm saying this, okay, let's mark this off right here as a tipping point. Okay, because if we, I would say this, I'll be honest here. If I was going to go long, what do I have to see? Right? We got the most traded price, 50% Fibonacci, supply right here, right? I'm not, scratch that. I wouldn't go long, but I'd be very cautious of going short. So if we break that, people are going to get hurt from shorting the market yesterday. If we hold it and hold it and hold it, this is all supply. So this would be tough sledding, but you could cause some short covering and to move higher, right? I'm not a biggest fan of this, but the market would definitely be, obviously Nasdaq's a lot of weight. The tech's a lot of weight in the S&P, so I'm just saying this would be very key because everybody was short from here, right? Now, the converse to that, for me, because remember, there's a lot of exuberance right now in tech pre-market. You can see all the volume building here. Okay, what needs to happen with that? Well, you need a bell curve to finish out the move. So look at the bell curve if we finished out the move. Hope you understand that. A completed profile also always looks like a bell curve. So you have, this is called the bullish imbalance, right? It needs to push higher to get excess. Which would set up for a nice short, right? Because this is supply, most traded price, 50% Fibonacci, right? So if I would be interested in this, okay? Push up, reject it, and now you're going to go and clean these single prints up, and you're going to target this weak low in the demand zone. Hold the runner, target the most traded price of the week, and then it could really fall. I'm not saying this happens, I'm just saying that that's how that would work, okay? Because one thing I didn't mention here is very important, very, very important. We're almost 100% net long overnight, okay? We closed here. Look, we opened here in the overnight, only dipped a little bit, and look, everybody's long. Okay, everybody's long. So it's very interesting with the psychology. There's two psychologies here, and I'm hoping I'm being clear here. I feel like I'm a little jumbled this morning because my daughter's here sick and behind me. Apologize if I'm rambling a little bit, but let's look at the psychology really quickly. Okay, now let's talk about the short fade. Okay, like fading the short, like I just said. If we come up here, I'm gonna want to go short, right? Now, what is that gonna? Why is that happening? Why is that a consideration, right? Because let's just say we know everybody's short from here, and let's say you were short in an equity, you didn't take profit, you're holding it, and you're waking up, and we settled down here, you're underwater. That could cause the push higher, right? That could cause the push higher because people closed here. We all closed, the market's closed here, but price is here. That would make me nervous if I was still short, right? We're getting some weakness now, but I don't know what that turns into, but that's the psychology of it, right? Now the other psychology is, okay, what if you're in the overnight and you got long here, building all this volume, right? And you get long, so you're in profit, and we do this. We come up to these key levels, probably built, but some shorts come in, and then we start selling off, right? So everybody who's here is long. It's gonna, with the morning volatility in the volume, it could just make this move just get killed, and then all the stocks that are being bought pre-market, they're gonna have to cover their positions. So it's really interesting that it can go either way, right? I'm more interested in the short side. So, you could come down here and bounce off. That is one scenario. Let's say the markets do what I said. They come down here. Ooh, that's a lot. That's thick. They come down here into this demand zone, even hit, let's just say, even bounce off this most traded price of the week, and you can't go through it, or you go through and come up, you start doing this, that's a long. That's a long. Because then you're going to get some short covering. So, not an easy market, but there is things setting up. Okay, there is things setting up. Hope that's making sense. All right. So you have a difference in both markets, right? Let's look at the ES real quick to see what it's doing right now. See, the ES is still weaker, right? Very tricky. But we have a plan. Okay. Let's look at crude. Let's see what crude's doing. I'm very interested in a long in crude. Okay. But let's look at the profile. We still have our bullish imbalance. Okay. A lot of volume building out up here, which means you need some excess. Right. I'm interested in the pullback here, right into this demand, right into the most traded price of the week. The inverse head and shoulders I spoke about the other day is still in play. We broke it. Now we just need to hold value here. Any move, I believe, in the market, this oil is gotten beaten down a little bit. It's broke the downtrend, so I'm looking for this demand to hold. So that I have alerts set all the time in my zones, but like this is what I'm really interested in. Okay, supplies up here, which is fine. So I'm hoping for a move down here. We hold it, we hold it, we hold it, and then we rip with oil. That's what I'm hoping for. That's right, most traded price. That's right, the most traded price. I'm gonna get a tattoo, most traded price. Speaking of most traded prices, let's just look at my favorite map to look at, right? Now, remember what I said all the time, biggest level, right? ES, 4023. Big moves come from it. Well, there you go. Once you crossed it, you crushed all the shorts, all these shorts. I mean, sorry, longs got liquidated and we went right down to monthly VWAP. So that's why I always track those prices, just like Rosa said. Now, look at the NASDAQ, right? We're above that key level. So that is showing strength, okay? We know this. Big key level here, NASDAQ's here, okay? NASDAQ peaked out here. Just like I said from the other day, look at that. That's the monthly high. Last monthly high, that was the resistance, okay? Came down here, getting a little pop right now. We have this node that's going to build out though. Okay, that would be the next move down, 126.49. If there's another move down, you're going here, and then you're going right here to the most traded price of the year, of the last year, and of this year. Okay. So really quickly, hit you with the watch us really quickly. I just want to show you guys really quickly. Where this all lines up, just to see it in candlesticks, and then I'll get out of here, let you guys go trade. So this is the ES, and I just did a fib from the top of the FOMC, okay, to the bottom of the move. All right, so what I'm paying attention to, okay, now this is, remember, this is the key levels. Here's our 40.26. Here's our most traded price of the month, right? The Fibonacci, now you already know this from the market profile, but it's 40.20. But here's 40.20, lines up right with that 100-day moving average. All they were managed to do so far was come up, all right? Not even to the 38.2% Fibonacci. They came right up here to the 100-day moving average, and they'd sold off to here. So now we're here, okay? So we're in a supply zone. So like I said, that's where I'm interested in shorts. If the market shows strength, then I'm interested in shorts here at the 50% Fibonacci, because we have all this overhead supply here. So that's why I just wanted to point that out. To make it clear on candlesticks, that's what I'm looking at. You could do the same thing in the NASDAQ. Okay, same thing. Like I said, it's stronger. So look at this move from the top of the FOMC, right? We came down here, but the NASDAQ's already went up to the 38.2% Fibonacci level. Okay, you can see the move, obviously, from all the stocks, right? We're kind of by this swing low here. But, we're finding selling in here. 50, and then look at that. That's what I talked about here, just to give it on a candlestick chart. The 50% Fibonacci is 128.79. Also lines up with supply, right? And the most traded price of yesterday, that's this pink box. So just to show it on candlesticks, okay? So that's where I'm interested in. If we come here and we can't go higher and we reverse, that's the short, right? Now look at all this. You're going to take that out if we get some volume, okay? So the most conservative short is the wafer up here. Okay, this is the 100% net long. All right, so I just wanted to point that out in candlesticks. Hopefully that drives it home a little more. That's going to be it for me today. I will update. It's kind of exciting that you have these kind of moves setting up, right? And give me a comment, like, or subscribe if you have any questions. Let me know. Comments, let me know. Share on Twitter if you can. Trying to grow the channel, so I'll continue to do my trade updates today. Whatever I trade, if hopefully it's a good one. So I'll do an update video about that too. I'm trying to do more shorts like that. So again, stay patient. Let's stay green. Let's have a good day. And if you hear from me, you hear from me. If you don't, you'll hear me tomorrow. All right? Take it easy.